Okay, in this video, I'm going to show you a quick setup that you can use once you understand how to use point and figure. So I get this question quite a bit. How do I use point and figure precisely for intraday trades? We took this trade to the upside. We took this trade to the downside. We talked about the breakout yesterday to the downside with the point and figure to earn additional profits on the way back down. Try and paper trade this or demo trade this until you get the hang of it. But let's start off here with this chart, pound futures again. Today is Friday, so September 11th, and let's go to, I say that the start of the London session is pretty important to me. There's the London session open. That's the first hour candle. This is a 1 hour chart, by the way. And I'm paying attention to, volume and also the way this candle closes. So there's a lot of effort, and then it pulls right back down. Very poor close for the most part. Didn't go negative, and then the final candle, or the second candle afterwards, is where we get a lot of volume here. And you can see here there's quite a bit of volume relative to, all the way back to, that's 12 o'clock, 12 p.m. Eastern time right there, that candle back here that printed that hammer. And then you can see how things sort of bottom out here, and there's a level of support right here. So it looks like it's going to be a retest, right? It's still not an opportunity to sell it just yet. It hasn't taken out the low from the previous day. And then we have this candle here that creates another hammer, and there's a lot of information here at this point that it's likely to turn around and start going right back up again. I talk about this as being bait. It's those traps where you see price moving down a little bit lower and people are thinking it's time to sell, and it isn't yet. It's just a matter of waiting for confirmation. So point and figure will put me in the right direction. Let me show you what the point and figure looks like. So this is my point and figure chart, and this is the setup here. And I don't get into this trade until I see some change in behavior or change in volatility or change somewhere to indicate whether support or resistance is confirming and holding, or if I'm looking at some kind of a breakout. So I'm using, I'm using the point and figure charts to help me identify these breakouts. The entry this morning was just at the 1.2800, trying to get it fill at the 2799, but 2800 is fine. You can see that there was a resistance level. We broke right through it. There's my entry. Now, I say that if you're hands-on, meaning that you're sitting at your computer and you can sit here and watch this. This is a 1 hour candle now. So we saw price spike up, and we've got about another 10 more minutes left on this candle. So again, if it starts to approach, there could be more to it later in the day. But this one went all the way as high as 35. So there was a lot more profitability in the trade to the first target. I can teach you how to use point and figure for intraday trades. That's what I'm teaching in my coaching program, the Real Deal Traders course. In addition to, of course, trading with candle patterns and to learn how to count these waves using classical technical analysis. And honestly, that is just about everything you need. But you need to understand how to identify these turning points. Once you can do that, you can do it in any trading environment on any time frame. It can put you in the path of really big breakouts and really big moves. I've been teaching my coaching students this method, the combination of the two. Okay, this is a quick follow-up. This is the same trade that we were talking about with the point and figure on the pound dollar. It's been about 25 minutes since I stopped, and we were looking at the first target achieved. It went as high as 35. You might remember this. It went as high as 35. That when I'm using the point and figure charts, I can calculate the expected take profit level and with almost pinpoint accuracy know where it's likely to go. So I talked about the 50 being the final target, but if you're hands-on and it's going through to the 60, well, 60 was my projected price target anyway based on the point and figure and my calculations. Based on the point and figure, if I was trading it off of the candlestick charts that I show you, so the candlestick charts, we were looking at this one. If I trade it off the candlestick charts, it's a little different, right? It's not the same amount of information. It's not the same kind of information there. So again, going back here, this paid from the entry of the 2800 level to 60, all within about an hour to an hour and a half. It really didn't take that long. Just to be safe, I will scale out at one of the psychological levels along the way. Again, because we talked about this when it was sitting down here right around 30 or 35 when I made the first half of this recording. There's my resistance point here at 60. So I need to lock in profits somewhere along the way just in case it doesn't go there and maybe something's off, right? Maybe the calculations are off, or maybe it's just one of those trades out of, let's say, so many that could be a potential failed trade. It's possible. So you always have to be prepared for that. But if there's profit in the trade, take it. You should be able to take it and scale out. The retracement here went as low as 13, and our entry was the 00, so it never even went back down to the break-even stop on the second half of the trade. So the second half of the trade, we were in the trade, and you could trade it straight to that 60 target or the 50. But again, 50, you set it in there. Let's say you set it and forget it and walk away, that type of thing, where you put the take profit level in your platform, or you're doing it from your phone. That's fine if that's all the time that you have, but there is more profit in these trades very often. And one of the key components to identifying these take profit levels, the accurate or real take profit levels along the way, is the point and figure. The point and figure is what's going to put me in a trade where, let's say if I don't scale out, I could trade it with one lot, one target, and that would end up ultimately being my target based on the data that I have here on the point and figure chart. But I can't see that, and it's hard to determine that at all times with the candlestick patterns, at least the way that I look at it. I'm not saying that it's impossible to calculate those. You could use Fibonacci tool to find the extension. Very often I do that just to give me a little extra added confirmation on a trade. But again, I can trade exclusively off the point and figure charts without even looking at the candlestick patterns. And there's nothing wrong with doing both or one or the other, but they're highly effective. And again, I'm not in trades at all times. I'm waiting for these specific opportunities, and it's just a matter of waiting for my entry and letting the trade work, using the appropriate stop loss, knowing where to take profits based on simple calculations here on the point and figure or your candlestick patterns. So a 60 pip trade, initially I had mentioned that it was 35. Once it hit that final high up here at 35 or 20, let's just say it's about 18 to 20 pips on this trade. If you're scaling out at the first target and that's all you took, that's fine too. There's nothing wrong with that. But you've got to realize the power and the potential and what's available here, and then be able to take advantage of it on these days when the market gives you trades like this. Okay, a quick follow-up just to give you an idea of what the rest of the day looks like. So what happens afterwards, right? We're going to talk about what happens when we remain inside of a range of consolidation. So we've got that high up here, we've got that low, and this is another range or a second opportunity. So we can trade it right back down carefully only when I get a signal. So you'll notice how it flattens out here and nothing really changes. You can see that there is a clearly defined level of resistance, a clearly defined level of support, and right when it breaks through that low here, sorry about that, let me get this out of the way, that low at 21, well, my entry is going to be 20 on the next change if I can get that. Sometimes it's going to be a little bit, it might be 19, but when the change takes place, again, this is not based on time, this is based on a change in volatility, a change in the price structure. Nothing happens until there is a change based on the parameters that I specify. So again, the entry at 20, 1.2820, the first target, if we're trading to psychological levels, the 2800. So again, I talked about it earlier. The psychological levels would be the 00, the 20, the 50, and the 80, and then again the 00, repeating all the way down. So here's on the way back down, getting in at 20. The first target is the 2800 00. The second target is 80. Now again, if you've correctly measured this, you know where it's likely to go, and you could eventually, when you get the hang of it, when you develop the confidence, and the confidence not just in the system, but in your confidence, the confidence that you need to develop in your ability to identify and correctly confirm it and trade it without hesitation, you could eventually just trade it one target, one lot, straight to that final target there. And again, this is trading it straight to the 2880 psychological level before it hits support. We would expect this kind of behavior after a move like this if it's going to remain sideways. It is Friday, and we need to lock in profits. We're not necessarily thinking that it's going to come back down and take out support. It could, but that would be another trade set up later. But this was a perfect opportunity to pick up, again, approximately 40 pips. Okay, so to recap today's trade here on the pound dollar. So again, the take profit levels very often are going to be psychological levels unless there's enough information on the point and figure chart to actually calculate and determine a more accurate take profit level, which in this case today was the 2860 level, and that's just about where it stopped. It stopped right there at a high of 63. And then we have another opportunity to short it here. Again, psychological levels based on the information. And in this situation, when we start to see price and these swings getting a little tighter and inside of a prior, which is the same thing I do when I'm looking at candlestick charts, I'm going to definitely start trading to some of these psychological levels to make sure that we're locking in profits. Now, if you can accurately, over time, when you get comfortable and familiar with these methods, you can safely trade to one target, which would be the final target. But initially, again, to establish confidence, also to help you build confidence in your own ability to read the charts and to execute this way, I highly recommend scaling out at two different target levels. These are psychological levels, the 20, the 50, the 80, and the 00. In this case, with an entry of 28.20, we traded it back down here to the 00, and then the final target was here at 80. At that point, I'm done with the trade. Remember, we want to get in and get out unless we have information that tells us precisely where the final take profit level is. We want to trade it just like this. At this point, I'm done. These moves in here are just short-term scalping opportunities at best. And I generally stay away from it, and you can see just how choppy it's getting. And we're moving into the end of the day, we're moving into the end of the week, and it's probably going to continue. It may end up making another move towards the downside here, towards support, but at this point, I'm just staying out of the way. This is just much too choppy here. So initially, with the first trade, the entry at 28, the final target at 60, or you could scale out at 20 and scale out at 50, but from entry of the 00 to the target here at 60, approximately 60 pips. And then again, the trade down here, the 28.20, down here to the final target at 80 for another 40 pips, or maybe 38 pips, 37 pips, depending on your spread. And at that point, you're done. So this is a really good trade here. Remember, paper trade this, 60 pips, 35 pips down. That's about 100 pips there. And remember, you can't do this every day. The market's not always going to give me, this pair isn't always going to give me a trade at all times during all sessions. Some days I can get 2 or 3 trades in one day using point and figure just like this. Other days I'm going to get maybe 1 trade. Other days I might get 5. And this is just one currency pair. I apply the same strategy to all currency pairs. And I teach you precisely how to measure and calculate and then figure out how far price can go based on the point and figure. Also using futures and using that contract volume that I mentioned in the previous chart with the candlesticks. And then also how to scale out and to find these opportunities on multiple time frames, multiple charts, multiple currency pairs. It's not uncommon to see a 2, 3, 4, 500 pip week. Some weeks I might only close with 100 pips. Other weeks I might close with 300 pips. And the key thing that I want you to remember is that I'm not double counting on these trades. This is from the entry to the final target, wherever it goes. We're not double counting. So when we talk about 100 pips between, or approximately between 2 trades here on the pound dollar, I'm talking about from the entry to the final target, from the entry to the final target, the equivalent of just about 100 pips there. That's a lot of money. I know a lot of people will calculate 100 pips, but they may get, if they have like, let's say 10 lots on a trade, and they're earning 10 pips on the trade, they'll calculate it as a 100 pip target or 100 pip trade, and technically that's what they've earned. But again, I think it's really misleading because it doesn't tell you how much of the movement that particular strategy can capture, because not everybody is going to execute 10 lots on one trade. And I think it's really important for you to understand exactly what's going on and where these targets are, where these entries are, based on the levels that we see on the chart, not just based on the number of contracts to try to beef up our performance. I don't do that. I can't stand when people do that. So you're going to get a clear, clean image and picture of exactly what's going on with the trades within the price structure for the day. I am opening the doors in the next few days here for the Real Deal Traders course, and I have exercises and worksheets that will walk you through all of this, the details, learning how to set up your charts so that you're using the right parameters. Thanks again for watching.